but India has been one of the least preferred emerging markets in the last couple of weeks for sure. Jim Walker, the MD of Asianomics, joins us on the phone line from Hong Kong to talk about that. He's been a big bull of the Indian markets for a long time. Jim, hi, good morning, and thank you for joining us. Sitting in Hong Kong, what's the sense you're getting about emerging markets like India? Have we lost our favorite emerging market tag?
I think one of the real problems with India at the moment is the Reserve Bank of India, which just doesn't seem to get the message at all when it comes to inflation, which is a bit of a pity for a central bank. And given its decision last week on the 25 basis point cut and then signalling that was enough for now, that's enough to put anybody off, and it's no surprise that foreign investors are selling, especially when they see what's been happening in China.
Okay. Good morning, Jim.
Morning.
At the moment, we are seeing a bit of a selling in all emerging markets, and to some extent that perhaps is because of rising US and European bond yields. Is not that one of the reasons why money is flowing out?
I'm not sure that that's really why money is flowing out. As I say, the moves in China over the course of the last year are beginning to suck money out of other emerging markets. It's the usual thing here that, of course, fund managers have missed the boat on China. An awful lot of them can't get money into the A-share markets. So what they're now trying to do is window dress and buy Hong Kong, buy 8 shares, buy American Chinese companies that are listed in America. And of course, to do that, they've basically got to sell other emerging market stocks. So there's a bit of if you like, a rebalancing going on as fund managers try and make themselves look good, having already missed the boat. It's a good opportunity for us in the long term to buy into other emerging markets. But at the moment, sentiment is pretty sour, and that's, as you say, quite a bit to do with what's happening in the developed countries, where policy is a complete mess.
What is your pecking order within Asia or within the emerging market basket?
My pecking order hasn't changed at all. Top of the line would be India. Despite the Reserve Bank and more because of the government, the Philippines, Indonesia and Taiwan. These would be right up at the top of my list, but particularly India and the Philippines.
Okay, so India and the Philippines continue to be the top market to invest into. Today the MSCI will decide whether to add the A-class shares, the China A-class shares, to the emerging market basket or not. Should Indian investors be worried about this at all?
Again, it would only be on a rebalancing basis, and of course it wouldn't happen overnight. The China stocks have run in a very crazy way, as they tend to do. They're now hugely overvalued for the fundamentals in the Chinese economy. Everything in China is going up in the stock market. Everything else in China is going down, from the rate of growth of the economy to the property market to the flow of Chinese people out to other parts of the region. So this is a delinking of fundamentals in the stock market that never lasts for long. And when you look at the way the stock market has moved in China, you know full well that there's a crash coming.
Yes, overheated, as they call it. But, Jim, you've had unending faith in the Indian markets for a long time now. We were just speaking with Morgan Stanley a while back, and they said that they expect the Sensex to hit that 30,000 level next year. What would your own expectation be of what returns one can see in the Indian markets in the next 12 months?
I agree completely. I'm very confident that the Sensex is going to start moving up again. I think it will come much more quickly if we get to the point where the Governor of the Reserve Bank of India's term has finished and he's replaced by somebody more sensible. But in the meantime, the fact is that the Indian economy is relatively steady. The government's doing a lot of the right things. And we really have a business cycle to look forward to over the next 5 to 10 years in India, which is a pretty powerful one. It's just a pity that there's no help from the monetary authorities.
Okay. Well, one final question to you, Jim. Even the earnings season that just concluded didn't give us much by way of an earnings growth upcycle. Which quarter would you see it turn up?
I would be expecting that we've seen the worst in India in terms of the earnings cycle. I think companies have been repairing their balance sheets for the last couple of years. Banks are pushing non-performing loans into the picture now, so we're seeing obviously bank earnings squeezed as they try and load up the non-performing loans. I think that loading up process will come to a halt in the next quarter or so. We'll begin to see recovery in bank earnings, and I think the economy has already stabilised, but it could be doing with a little bit of a helping hand from both the government and the central bank. But I think that this year's certainly the bottom of the earnings down cycle, and we can look forward to much better prospects over the coming quarters.
All right, Jim, you have a great week ahead. Thank you for stopping by and giving us your views. That's the word coming in from Asianomics. Continue to remain very bullish on India and on the Philippines market. China is just an overheated market now, they say. We'll